You got people here that are high up that are making policies or have been involved in making policies, all saying the same thing, that we need to basically inject some, as Zoltan put it, a Volker moment into the equation. We need to shock and awe. We need to drive down the asset prices to, I think, make people start to rein in their spending and to wake people up. And the question is, can they do this? It's never been done before, where they are able to kind of ride the rails. And I think it's what we're looking at is a much higher probability, done again, of market volatility heading into the spring.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us, 1-888-81-LIBERTY.
Welcome back to Liberty and Finance. We have a returning guest. Andy Schectman, the CEO of Miles Franklin Precious Metals, joins us for another weekly market update. This one's a little bit different because of some constraints on our schedule. We're going to record this in advance. We're recording it today, Thursday, February 17th, for next Tuesday. You're watching this Tuesday, February 22nd. So a lot can unfold between when we recorded this and when you're watching it, but we're going to try our very best to be in the right place to help you as much as we can and to talk about some important things that are going on right now. Andy, thanks for joining us again here on Liberty and Finance.
Great to be here. Yeah, you're so right, Dunnigan. I mean, it seems so much happens every single day. I think between now and the time that this comes out, we may need to add a supplement to the end of it. It just seems things keep on accelerating in terms of not only the scope of things, but from every different angle we see things. So yeah, I am glad to be here, and I'll be surprised if we don't add a little bit of a supplement to the end of this before it's all said and done, because things just keep on moving along, that's for sure.
Just in the past week here, we've had an emergency meeting by the Federal Reserve. We've had a surprise outage of all 5 of Canada's major banks in the last 24 hours. We've had Gregor Mannarino coming out with his increased market risk indicator and saying he's not comfortable with the way things are shaping up. And I held a group chat with some devoted clients and newbies who are just getting into this, and they're talking about hearing from multiple sources, multiple analysts, talking about increased concerns of extreme stress in the banking system, extreme stress geopolitically, extreme stress in the currency system. So yeah, who knows in the next 5 days before this comes out what may have unfolded, but we wanted to make sure and touch base. You talked about a story that just came out about the Federal Reserve, and if you could touch on that and where you think that indicates as an important point before we get to our weekly special.
Yeah, you had James Bullard come out a few weeks ago talking about an aggressive quantitative tightening idea that he had, where he thought that the Fed not only should accelerate the pace in which they stop asset purchases, but actually accelerate the pace that they've done before in terms of unwinding, selling off their balance sheet, that he was calling for a 50 basis point rate hike and even intra-meeting rate hikes. And, there were a lot of people that came in to do damage control and poo-poo what he was saying. But today, he came out and reiterated, and he's calling for strong action from the Fed against stubborn inflation, and more or less saying that they're missing their inflation target and that this is all happening while they're still making asset purchases. And this is very concerning, actually, in that we're seeing other articles talk about the economy is already beginning to slow down. And so when you see reiteration from one of the main Fed economists, Fed governors, saying, hey, we need to really step this up. We need to accelerate the pace at which we're doing it. We need to announce a 50 basis point reduction immediately. We're seeing a shift to less accommodation. And, when you realize that the economy is all starting to show signs of slowing down in new housing applications and new car purchases, because things are getting expensive, discretionary spending is not as important when the everyday staples are getting expensive. The scary part about all this is to see calls for less accommodation, a more swift and expedient unwinding of the balance sheet and a more aggressive approach to raising rates in the face of a slowing economy. At the same time, we have Zoltan Polzar, who came out today and talked about something very similar. He's basically saying what we've been talking about for a long time. This is the gentleman who is known for his writings and information on the repo market. He was once a member of the New York Fed, I believe. And what he's talking about is, look, the only way that this is going to resolve itself is to, without blowing up the entire system, is to create volatility in the stock market, because he points to the fact that we have record high inflation, price inflation, along with record low labor participation, that people are feeling wealthy with all of their asset prices at all-time highs, whether it be younger generations with Bitcoin or retirees, nearing retirees, with 401ks and house prices at all-time highs. The incentive to get into the labor force is low, prices are high, and there's less stuff being made because there's fewer people making it. Basically what he is saying is that the only way that you can incentivize people back into the market, the only way that you can slow down the pace of inflation, price inflation, is to shock the market, and to shock it by watching the rates rise enough to drive down the equity prices. And the question is, when that happens, where do they go? But you got people here that are high up, that are making policies or have been involved in making policies, all saying the same thing, that we need to basically inject some, as Zoltan put it, a Volker moment into the equation. We need to shock and awe. We need to drive down the asset prices to, I think, make people start to rein in their spending and to wake people up. And the question is, can they do this? It's never been done before, where they are able to kind of ride the rails. And I think it's what we're looking at is a much higher probability, done again, of market volatility heading into the spring. And I think the Fed realizes that they're going to have that moment where the markets fall to reach an equilibrium. And we're a long ways away from that, of course. But when you see guys like this come out publicly, and Bullard, after being poo-pooed and damage controlled, come out and reiterate, and Polzar come out and say, hey, the only way that this happens is to bring asset prices down, to shock people into not spending as much, not taking on so much risk with record high margin debt, reining it in a little bit, bringing down wage inflation. I think it's starting to get real. It really, truly is starting to get real. And we keep talking about, what does the Fed do? These are, I think, the plans that they're going to take. They're going to try to ride the rails, shake the heck out of the markets, and not crater everything to try to shock things back into a new normal. I don't know. I find it very concerning, because, quite frankly, I don't see how they do this without reversing course and piling more money into accommodating, into lowering rates, and into a inflationary policy that we've been on. They're talking about, in fact, the head economist, the Bank of America, is talking about, because of this, when we see the Fed is still at zero rates and buying bonds, and we see things slowing down, that when they do this, we will see a recession as soon as the second half of 2022. That's when they all start implementing, by March or April, this policy. And what does it mean for the rest of the year? It's starting to get real. It really is starting to get real.
You mentioned being concerned about it. You've talked to us for years about Sun Tzu's The Art of War and Misdirection. So in the past, when you've got loud voices at the top starting to talk about a new trend or a new direction and that sort of thing, usually it's too late by that time for the little guy to try to reposition themselves, because if it's the truth that that's what the direction they're heading, then the major players and the elites have already positioned themselves ahead of that talk being made public. On the other hand, if there's still time, then time is of the essence to reposition oneself, because once the crowd starts to believe that the tide is shifting, it's no fun at all. It's very harmful and destructive for people to try to compete in that crowd and to just get clobbered by the crowd trying to stream out the exit doors, and the exit doors are usually very limited. So I'm very concerned about ordinary people. That's part of our whole channel, Reluctant Preppers, trying to help people be aware and prepared to avoid catastrophic harm to their family's future, including their finances, something we've been concerned about for a long time. It'll be interesting because all this whole time we've also heard people talking about an exponential melt-up coming in the markets. We've been seeing that happen in some respects, but whether this will be the shock and awe that comes while there's weak hands being shaken out and into strong hands right for that grand finale melt-up moment before the long and protracted Mother Nature takes over and you get this grinding bear market that reduces by 80% or whatever. We've heard a lot of different voices predicting how this volatility, as you describe it, is going to play out. But it seems like this year is going to be a year of fireworks. And so people who are wanting to step aside, at least in some measure, from the roller coaster and to have something physical, something solid on the side. You've talked to us for the last month or more about the extreme difficulty getting sovereign minted silver coins out for a variety of reasons, but I understand that you see a light at the end of the tunnel there, and there are some sovereign minted coins that you have not in hand yet, but on their way. Could you tell us about those?
Yeah, it just goes to show how long it takes to get these coins in, and at a halfway decent price. I think we've gotten a line on something that will fit the bill. About 8 weeks ago, we purchased 2022 Australian kangaroos. They have cleared customs today, which will put it a day too late to get on our next truck, which will be at our warehouse on Monday. So we will have these a week from Monday, which would be Monday the 28th, brand new 2022 Australian kangaroos. And this is what I've been getting at all along. Now, normally, we're able to have them in our warehouse in a day or two without a second thought. We're looking at 10 weeks from the time we ordered it to the time they get into our warehouse. And, we've been dealing with logistics problems literally all year long and seem to be getting worse. We had a discussion offline yesterday about this. But as far as the kangaroos are concerned, look, they're maybe my favorite coin in sovereign coins, and when we factor in value for quality, you're talking the purest silver coin in the world at 4.9 fine, and the premium that we're able to offer them to at $3.99 to the public is $1.50 or so less than the only other 4.9 fine coin, the Canadian Maple Leaf. It's the purest coin in the world. It's from one of the 6 major mints. They come in boxes of 250, which make them incredibly convenient to move around and to store. And they're available, which is really the best part about it. I have not felt comfortable offering sovereign mint coins for several weeks now, and that's why I've been focusing on the value found in bars, in 5-ounce, 10-ounce, kilo bars, even 100-ounce, because the premiums have gotten too high. Now, this is the first time in, I think, the entire year that we've offered anything other than Silver Eagles that as a sovereign coin. And this underscores just how difficult it has been for me to get anything in that I would qualify as a special. So for those people who are looking to get a sovereign mint coin, one of the best, this is as good as it's been literally since the beginning of 2022.
Well, Andy, thank you for that. As always, we have a lot of our viewers rely on not only the insights of what's going on inside the silver and gold investment retail supply chain, but also the trends of what's happening in availability of specific products that they've been waiting for to try to add or begin accumulating something real to protect their family's future. So as always, just thank you for joining us on Liberty and Finance. I know that this week is going to be shorter than usual, but if there's any final thoughts that you wanted to add for our viewers before we let you go?
And the only final thoughts really that I have is that this is all starting to unwind. It's starting to get real. And, we can ponder about what moves the Fed's going to make or isn't going to make. The point of it is that they have to do something. And when you see heads of Fed branches coming out and saying this is what we need to do, we need to double down on our efforts to unwind this massive bubble, the greatest bubble in financial assets ever seen, it's getting real. And I think people need to be prepared and get ahead of this and start to mitigate your exposure. Take some profit off the table and put it into what is probably the most undervalued asset on the planet. Take profit from areas of equities and cryptocurrencies that are at all-time highs and move it into something that is half of its all-time high and poised for what may be a generational move. Certainly, I'll say this, the last thought that I have is that the demand and the amount of silver that is being sold is not reflective of the price, not even a little bit. And so this is, I think, getting close to the 12th hour, at least in terms of seeing how it all plays out. And if things go the way that Bullard is talking about, or Pulsar is talking about, or even Fed Chairman Powell, if they really do start to get tough on inflation, which a lot of us don't think they will, but if they do, and if this may be the beginning of the reset or the beginning of something that is going to shake the markets enough to allow the Fed a little bit of wiggle room, it's getting close to that moment. And, they talk about March, but you don't want to wait until March. You want to get prepared now. And this is the best thing we've had to offer in a long time. Glad to bring it to your listeners. And other than that, if there's anything that pops up between now and when this airs, I'm happy to jump on and add a little bit to the tail end and dot the I's and cross the T's if need be.
Thanks, and I wanted to remind everyone that if you want to make sure that you are getting our every single night publications on our broadcast with all of our interviews that go out at 9 p.m. Eastern, 6 p.m. Pacific, every night of the week, 7 nights a week, make sure you sign up for our free newsletter alerts. We send out email alerts of every broadcast that we do, and you have to go to libertyandfinance.com. That's libertyandfinance.com. Put in your name, email address, submit, and then make sure you confirm the confirmation email, and you'll get every single interview of ours, no matter which of our social media outlets it broadcasts on. Also, in case you didn't catch that earlier, we are now covering the phone lines into late in the night and on weekends, so that to try to make sure that we're accessible to you when you need us. And as always, Andy, thanks for joining us here for these weekly market updates on Liberty and Finance.
All the best to you, Dunnigan. It's always a pleasure to be here.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.